Welcome, Giles. Our business editor, the BNZ's headline profit down 12%, was it, to 913 million? I'm just looking at your notes. That's a bit of a hit.
I can see you shedding some tears for them, John, obviously. But really, they've had a bit of a squeeze on their margins because it's low interest rates means that they're not being able to get quite so much money for when they lend out. There's also quite a tough competition in the banking market, and also their money market dealings. They, like everybody else who are professional investors, need to keep an eye on currencies and interest rates. They use a thing called derivatives, which is basically it's a form of financial market betting, let's be quite blunt about it. They were on the wrong side of quite a few of those deals, and they were caught by a rising New Zealand dollar and volatility in interest rate margins. But you'd have to say that overall, they're reasonably happy. I had a long conversation with Anthony Healy, the chief executive. They've been making strides in the Auckland housing market, and they were also doing quite well in small business lending. Their bad loans, now you would think that with the squeeze on the dairy sector that they might take a bit of a hit, but they actually reduced their bad loans by a few $1 million, but they're doing quite well there. They seem to have positioned themselves quite comfortably. And the other view is that from what Anthony Healy was saying to me, he doesn't expect any significant downturn in house prices. In fact, he doesn't expect house prices to fall. Perhaps isolated pockets, they may level out. But he says all the conditions that you would need, the bad conditions here and overseas, just aren't present. There's demand for housing, there's demand for finance, and no matter what the Reserve Bank says and what the Reserve Bank tries to do, they'll keep earning and they'll keep doing so well. So the bank's pretty happy. I asked him more bank closures, more branch closures. He sort of skated around on the head of the pin to say, well, we find that we're having much greater interaction with people on the digital services and outlets. And there's probably less of a physical footprint these days. So I take that to mean, yes, there'll be more branch closures as and when it suits their business needs. But
which would follow what ANZ and Westpac have done, right?
Exactly.
Yeah.
Yes.
What happened on the markets,
Giles? They didn't do too badly. Look, just under $1 billion, and don't be surprised if they actually crack back above that. The markets,
we won't be having a whip round in the office for them. I think they can get by on 913 million, can't they?
I think they possibly can. They certainly didn't try to tap me for anything more than $4 or $5. But in the games of snakes and ladders on the share market, we were down the snakes yesterday. We're up the ladder by 44 points today to 6942 for the top 50 index. And the New Zealand dollar, 71.5 US cents, 93.8 Australian.